Some investors think this could be the next TSMC, and whether it's true or not, lately one three-letter word keeps coming up. ADR. SK Hynix ADR. It's all over the news, it's all over the Reddit, and it even showed up in the comments of our last video. But here's the thing. A lot of people are talking about ADRs. Not many people actually understand what they are and why they matter. So let's fix that. What exactly is an ADR? Why does SK Hynix want one? And what could it mean for investors? Let's see what Reddit is asking. Right, let's start with the first question. US ADR. That's actually a great place to start. So ADR is basically a way for Americans to buy a foreign stock without leaving the US market. So normally, if you wanted to buy SK Hynix stock, you would have to go through Korean stock market or even ETFs. An ADR changes that. Banks hold the underlying shares in Korea, and ADR is backed by those share trades in the United States. So for US investors, it looks and feels just like buying any other US listed stocks. Then when is the stock going to list? So according to recent reports, as I remember, SK Hynix submitted its ADR registration filing to SEC back in March, and the approval itself could come early as late June. So if that happens, investor would finally get more clarity on timing, share count, and the overall structure of the ADR itself. 2. And the most frequently asked question is whether the US listing is already priced in with the stock. So the answer is probably, at least partly. So recently, SK Hynix moved higher on expectation for US ADR in Korean stock market. Flashback last week, it rose about 28%. Massive, right? So yes, some of that excitement may already be reflected in the stock market price, but investors shouldn't focus only on the listing itself. Actually, there are more catalysts to come after the listing. First of all, the most important one, greater access for US investors. And second, potential inclusion in additional US indexes like broader semiconductor benchmark, the SOX ETFs. So SOX, not the socks that you wear it, but the Philadelphia Semiconductor Index. Very similar to how the TSMC did. So according to a Korean firm called Mira Asset Security, SK Hynix ADR market capitalization would already rank around 25th among the roughly 30 SOX constituents. And if the ADR moves forward as expected, the firm sees September 2027 as the earliest and realistic window for the regular SOX rebalancing inclusion. And that's why the entire story isn't priced yet. If it were, think about it. You would expect the valuation gap between SK Hynix and Micron to be much smaller now, but it's not. SK Hynix share price can rise up to 76% if ADR listing closes its valuation gap versus Micron. That's actually a hot topic, right? So in this comment or the post itself, current SK Hynix, according to this table, is 6.3 times the earning. As I remember, last week, SK Hynix rose about 28%, so the valuation itself rose up to 7 times the earning. And current Micron valuation, according to this chart, is 11 times. So let me do a quick calculation. That's about 58%, so that's still massive. So 58 to 76% would clearly be the best case scenario. Yes, that may happen, but at this stage, some analysts are focused on something else, the fundamental earnings. So a recent report from Eugene Investment and Securities argue that SK Hynix is still in an earning revision cycle with profits estimates continuing to move higher. So, in other words, the story today isn't only about multiple expansion, it's also about the rising earning itself, the fundamentals. The ADR may help with the re-rating story, but it's still only part of the story. There are rumors of a dilution to get capital at the same time they get listed. Recently, Korean media reported that SK Hynix could consider a shareholder return program worth as much as 100 trillion won, which is roughly $70 to $75 billion over time. Yes, you heard it, 1 trillion won, including potential buybacks. The company later pushed back on those reports, saying no specific size or share retirement plan has been decided. Yes, that's true. But it's also true that the market isn't making this expectation out of the thin air. SK Hynix already committed to returning 50% of its free cash flow to shareholders through 2027. And thanks to the whole AI-driven HBM boom, that free cash flow is expected to rise dramatically over the next few years. So, in other words, the company denied the specific number, but it did not deny that the shareholder returns are likely to increase as cash generation grows. So, if the ADR ultimately involves issuing a new shares, many investors believe SK Hynix has both the incentive and the financial capacity to offset at least part of that dilution over time. Does that answer your question? Right. Moving on, talking about premium, that's very important when we discuss ADR, right? One of the comments says most likely SK Hynix trade 10 to 20% more expensive on US stock exchange, similar to other ADRs. So even if Korean discount is real, it won't help you. That's a fair point. And as I said before, since only about 2% of the shares are expected to be listed as ADR, scarcity would certainly create a premium in the US market. But it's worth remembering that markets don't operate in isolation. Korean investors already pay close attention to overseas trading signals, including GDR in Europe. If the ADR begins to trade at a meaningful premium in the US market, that could influence sentiment in the Korean listed shares as well. The ADR may not just reflect valuation, it could also shape it. Okay, so next question. We have to talk about geopolitical risk when talking about Korean stocks, right? So the comment said, still a Korean company and susceptible to geopolitical risk. Micron benefits from being an American company. The policies favoring domestic manufacturing and CHIPS Act, blah, blah, blah. That's a fair point. But geopolitical risk alone doesn't fully explain the gap. TSMC is a good example. Geopolitical risk is frequently part of the discussion around TSMC too. Yet, investors have continued to assign its premium valuation because it's a technological leadership and strategic importance. And there's another point worth considering too. For many Korean investors, the North Korea risk is less a variable than more of a constant. It's something that the market has lived with for decades. That doesn't mean that the risk isn't real, but it does mean investors often focus on earnings, liquidity, and industry cycles than the geopolitical headline. We covered a lot of grounds today. ADR, dilution, index inclusion, the Korea discount, and of course, AI. But maybe all of those questions lead to one bigger question. I'm curious where you stand. Is the ADR the catalyst, or is the AI story still the real driver? And what would happen to SK Hynix after the ADR? Let me know in the comments. More K-Stock more of what's happening inside the Korean market before global money fully catches on. Hit like, subscribe, and stay tuned. So wow, guys, I haven't expected this much heat on our first video, but thank you for your support, all those loving comments. Let me just quickly introduce myself. My name is Yenny, a financial news anchor for Korean market shows. I actually cover the Korean market from the opening, so I do know a lot of the sentiment that goes around the Korean market and Korean stocks. So I'm here to answer all of those questions that you want to know from the perspective of the insiders. So stay tuned for what's about to come.